It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, October 5th, 2016, hump day here in this first full week of the 10th month of the year 2016. Hope you guys are having a great week so far. Boy, we got some great trading opportunities setting up for tomorrow. Crude oil is bullish and still trying to test that elusive $50 a barrel level. I thought they were going to grab it today after inventories came out, but not quite there yet. Even the S&P is also bullish and trying to complete a wedge target up around 2162 and change, but they've got some big resistance standing in the way right now on the S&P. Gold is bearish, but opposite of the S&P, unable to get through some key support levels on gold for tomorrow, and Euro is range bound and trading right in the middle of a multi-day triangle this evening. You know, as always, I got a great plan of attack for tomorrow. Before we get into charts tonight, though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come over here to the blog at Sideways Markets and watch the full-length version. While you're here, don't forget to register for our mailing list. I'll send you an email every evening when our nightly newsletter goes live. Below the video tonight, don't forget you can download all the charts. That's right, all the charts you see me using in tonight's video. You can download those below that video tonight on the blog. And of course, over on the right-hand side, don't forget, if you're not a member here at School of Trade, grab a free pass, come out and join me in the trade room as a guest. And if you're brand new here to SOT, we got a great frequently asked questions page on our blog here. Check out the frequently asked questions on the right-hand side at Sideways Markets. All right, enough of the chit-chat here, JJ. Let's jump right into it here. We're going right into the meat and potatoes here this week. It's the first week of the month, and of course, that means we get some non-farm payrolls lingering. We got some ECB tomorrow morning for all you crazy Euro traders out there. Let's jump right into it here. First of all, tonight, Wednesday, October the 5th, we have look at this list here. No major news coming out of Asia here overnight, so I'm going to trade in the Asian session. You guys got clear skies ahead. As of tomorrow morning, though, we do have we're going to hear from chain store sales. It's not going to be a big deal tomorrow morning. Really, the bulk of the news tomorrow will be in the London session. We get the ECB meeting minutes. Do you think it's going to be a big deal? What comes out of it? Yeah, it's definitely going to be a big deal tomorrow morning. So if you're trading the Euro, definitely be aware of this tomorrow, 7:30 a.m., the ECB meeting minutes. You know, they got that deadline lingering, right, for Brexit. You know, everything's up in the air right now. So there's going to be a lot of folks, right, using those ECB minutes tomorrow morning. So make sure you're paying attention if you're on the Euro. I don't think, you know, maybe gold also too, you know, Euro, gold. I don't think the S&P and the crude will be too much affected by it. You know, one of the reasons why I like trading crude is because it isn't as affected as the other markets. Then, of course, we go into the U.S. session tomorrow. We get the 8:30 jobless claims. This news report has been an ineffective news report. It's listed as a market mover, but my personal opinion, the number's manipulated. I don't think anybody's trusted that number for years, ever since the old credit crunch of 2008, 2009. So, you know, it's a major news report tomorrow at 8:30 a.m., but I doubt we even see a blink. I don't think traders even trust it anymore. Other than that, though, that's pretty much all we got there tomorrow. One thing you do want to be aware of, and of course we talked about early morning tomorrow morning, right, listening to the ECB minutes, is that Friday is non-farm Friday. So, of course, tomorrow afternoon, be aware, it is likely going to get a little bit slippery, a little bit low volume tomorrow afternoon. Be aware of that because, of course, at the end of the day on Thursday, most big positions are going to be closed out or at least heavily cut down because the employment numbers coming out early on Friday. Remember, right, guys and gals like you and I, right, we're trading, let's say, anything under 50 to 100 contracts, right? We don't have to worry too much about getting out of positions, right? We can do that before the news on Friday. But if you're trading a couple thousand contracts, right, if you've got a lot of assets under management, if you will, right, and you're using the futures markets to hedge your equity positions or your commodity positions, right, then you've got to really be careful going into major news on Friday morning. So bottom line is be aware, low volume, and with low volume and people getting in and getting out ahead of the news on Friday, it does get a little bit slippery. So be aware of that tomorrow afternoon. All right, and we'll talk about, in tomorrow night's newsletter, we'll talk about the plan for Friday's non-farm payrolls. All right, guys, let's rock and roll here. We got some good charts to look at tonight. We got crude. How about some crude, some S&P, a little bit of gold, and maybe some euro to finish it up here tonight. Crude oil is bullish and trying to test the elusive $50 a barrel number this evening with a combination of yesterday's spike in channel along with today's spike in range tells us that the most reliable buying opportunities are likely going to come with traps and failures at the lows. and selling right now is completely off the table until we see some serious strength to the downsides tomorrow. We talked about this yesterday. We've been talking about this for a few weeks now. It does feel like there's that lingering kind of magnet, right? $50 a barrel. We talked about that last night. As soon as that $50 a barrel area creeps into the chart, then all of a sudden, same thing for the $100 a barrel area, if we ever see that again. But again, $50 a barrel. They missed it a couple times today, and this is why I always tell people, be careful to get too wrapped up in what you think is going to be happening. We talked about this today after the inventory report today. I said, it's going to take a little bit more of a push. We were watching this high here today in the trade room, and they couldn't get the moving average above that high, right? And that's a really big clue. They really couldn't get that explosive move above it, and you don't want to go just hoping that they're going to get to $50 a barrel. I'm sure a lot of traders today saw this move after inventories and bought the heck out of it, just thinking it's got to get there now, right? Well, there are a lot of pain when it pulled back there, right, end of the morning this morning. So remember, don't go guessing, don't go gambling your money away here right now. This can, as the old saying goes, the market can remain irrational longer than we can remain solvent in our trade accounts, right? So wait for the proper timing on this. Now, at this point now, there's so much resistance there in the way. I think the hard part right now is going to be who's going to want to buy now going into that $50 a barrel. You got to think it's going to stick there a little bit. So if I'm the average trader, both big and small size traders here, educated traders, of course, I'm talking about here. I just don't see this the risk to reward doesn't appear to be very good here, because if I'm buying high right now, is it really going to keep going through 50? I don't think so, right? What's probably going to happen is, if we do get up there, is we're probably going to find some ranges up here. So, whatever happens tomorrow and on Friday, we're going to be watching this $50 a barrel area closely, and don't be surprised if you start seeing a triangle or a range forming around it. And again, until we can see some real strength above 50, be very careful buying above 50 here if we do get there tomorrow, right? We'll have to wait and see here right now. So bottom line is, we have really two big clues here right now. Buyers are hunting for that $50 a barrel. They're hunting for the triple measured move. They're hunting for the double up. They got to get through 50 first, though. Let's be honest. There are two big clues in this chart right now. Of course, well, three big clues. The big one, of course, being the round number at 50, which they have not got to yet. First one, yesterday's API report. If you recall, we talked about how the API report oftentimes doubles up. And of course, sure enough, right, that's exactly where we spent most of our time banging our heads against the wall here, right, tonight. So very good example of how news spikes can be doubled up. It's very reliable as far as at least target goes and overhead resistance. So, well, that turned, of course, into a spike in channel. So this is a very broad spike in channel. And what you're going to notice tonight is there are a couple charts tonight, crude oil being one of them, the euro being one of them, where I've had to go back and use prior day's information, which, if you follow my newsletter, I don't really like to rely on yesterday's information, but this, of course, is one example of that. Bull spike in channel. You could also just call this a bull channel on the day today if you wanted to. I'm going to call it a bull spike in channel because I like the fact that it gives us the correction zone, right? So now the correction zone is down in this area here, right, from that 49.35 to that 49.10. There's your correction zone right there. So bottom line is, and you saw it today, right? You saw it today after the inventories came out. This is likely going to be an area where buyers are waiting, right? Buyers are scaling in. They're trying to get in at a much lower price, because again, I would much rather be buying low with a target back to 50 than trying to buy at 50, hoping it goes to 55, right? It just, again, we don't know enough, right? I shouldn't say an opinion on this. We don't know enough about how it's going to react to 50 yet. Okay, so I'd rather be a buyer at the low, and I'm sure there'll be more buyers that agree with me on that. Now, the next thing is going to be this spike in range. Spike in range, of course, came after the inventory report. Most news reports turn into spikes. Most spikes, like I said in last night's newsletter, will turn into spike in channels, spike in ranges, spike in wedges, flags, things like that. And so we're seeing that right now. Most important thing right now is when I see the market go into a spike and range, use the directional bias, right? What's the directional bias? It's bullish, right? Use that directional bias, it's bullish. And I'm looking for buying opportunities at the lows. And really what I'm trying to do in this is try to get this price below that low. Sellers try to reverse. And what I'm then looking for is seller failure, right, to go back up. Okay, so buying low using failures. We're going to talk more about that on the euro. What about if it was to go higher? This is where we have to see some tremendous strength. It's got to be real strong. What I don't want to do is get caught trying to do this, right? I don't want to get caught trying to buy that type of pullback. What I want to buy is I want to buy a pullback that looks like, right, that looks like that. Even more so, and we talked about this last night, is there should be a moving average here somewhere, and that really helps to illustrate the amount of strength that I'd be looking for, right, to buy that breakout pullback, right? So, and again, we talked about that today in our trade room where we had this, again, there was your high, and so we broke above that high, but look, the moving averages couldn't come with it. It wasn't a strong enough breakout. It kept us from getting caught, right, trying to buy those breakout pullbacks. So, of course, there's your range, right? There's your breakout pullback. But again, you look where that puts you now. Do I really want to be buying into 50? That's going to be a marginal trade there in tomorrow's session. The big deal is you're probably going to see a whole lot of sellers fading it and buyers buying it. People getting in, people getting out around 50. And it's probably going to be a pretty choppy area. Really, the only way that I'd be comfortable being a buyer there is if it just torched. Right, it's got to be a real strong move, and even then, it'll probably be exhaustion. We'll have to see how it looks when we get there, right? But as of right now, though, the most reliable trades here are going to be below the low of that range, down in that battle zone, looking for those failures back up. Just one thing to keep in mind, though, is if I scroll forward here, one thing to definitely keep in mind is if we do get, and I wouldn't be surprised at all, because after that big juice we got after the API report, I wouldn't be surprised at all. This thing really digs in here. Nice deep pullback. And so what you want to be thinking about is the bears are going to have a shot here in the short term. But then what you want to remember is if it does make a real deep correction into that 49, it becomes a bear market at that point. So beware trying to buy that 49 until you get that breakout pullback, and then that one's going to be the one you want to buy right there. Okay? So, of course, if it does, right, if we just kind of shoot lower here and then seller failure go back up, that's fine and dandy. Right? Even honestly down to that 49.35, right? Seller failure go back up. But if we really dig in, right? I mean, if this thing really shoots, they hold, we dig in down here, this is where that failure, right, becomes a whole lot less reliable. We'd rather see that new swing high, right? And then, of course, buyers hold that pullback. Like I always remind my students, when a bull market turns short-term bearish and then goes back to bullish, you don't need to worry about being the first one in down here. You got plenty of time to go back to that high. So take your time to find the right opportunity here, so you have the odds on your side. What about being a seller right now? Being a seller right now, you've got to think everybody's going. They can smell that $50 a barrel right now. And it does not take a technician's mind, right, to look at that round number and think we're going to keep going higher here. So we have to think anything that pulls back right now is going to be a buying opportunity. The only thing here would be if we break and can hold below that 49.10. 49.10, 49 even, and even then, there isn't that much room here left to go. Their target would be, of course, back down, right, to that low from yesterday, whatever that thing happens to be. What is that? Right, 48.55, 48.53. All right, so keep it in mind. So, like I said last night, do not be a seller just because you think to, and don't just blindly buy the 50 right now, because it looks like that'll continue to be a real trappy area there if you get too aggressive on it. All right, good plan tomorrow. We'll be trading that tomorrow morning live in real time in our trade room. How about some S&P? The S&P is in a real similar situation. It's clearly bullish, but there's some resistance here, right? So the E-mini S&P is bullish and trying to complete a wedge target up at 2162. But last week's closing price at 56.75 keeps acting as major resistance, which tells the buyers to either wait for a deep pullback so they can buy low, or look for a strong enough move to push through this level on the way to reaching the wedge and the measured move targets waiting overhead. This is kind of that similar situation. Think of the prior week close at 56 3/4 as the $50 a barrel area, right? So it may keep getting sucked up into that prior week close, right?